Dear students, welcome to my channel, Dr. V.R. Pudili, Professor of Management and Economics. In this video, I am dealing with international capital market instruments including GDRs, ADRs, IDRs, FCCBs and ECBs. International capital market instruments. GDRs, ADRs, IDRs, FCCBs and ECBs. Let us now first deal with Global Depository Receipts GDRs. GDR is an instrument which allows Indian corporate, banks, non-banking financial companies, etc. to raise funds through equity issues abroad to augment their resources for domestic operations. The local currency shares of a company are delivered to the depository bank, usually an overseas depository bank. The depository bank issues depository receipts of these shares, and such depository receipts denominated in US dollars are known as Global Depository Receipts GDRs. GDR is a negotiable instrument and can be traded freely like any other security. A GDR is a dollar denominated instrument of a company traded in stock exchanges outside the country of origin. It represents a certain number of underlying equity shares. In Indian context, a GDR is an instrument issued abroad by an Indian company to raise funds in some foreign currency and is listed and traded on a foreign stock exchange. The holders of GDRs do not carry any voting rights but only entitled for dividends and capital appreciation. Many Indian companies such as Infosys, Reliance, Wipro and ICICI have raised money through issue of GDRs. Two, American Depository Receipts ADRs. The depository receipts issued by a company in the USA are known as American Depository Receipts. ADRs are bought and sold in American markets like regular stocks. It is similar to a GDR except that it can be issued only to American citizens and can be listed and traded on a stock exchange of USA. 3. Indian Depository Receipts IDRs. An Indian Depository Receipt is a financial instrument denominated in Indian rupees in the form of a depository receipt. It is created by an Indian depository to enable a foreign company to raise funds from the Indian securities market. The IDR is a specific Indian version of the similar global depository receipts. The foreign company issues IDR deposits of shares to an Indian depository. Indian depository refers to a custodian of securities registered with the Securities and Exchange Board of India. In turn, the depository issues receipts to investors in India against these shares. The benefits of the underlying shares like bonus, dividends, etc. accrue to the IDR holders in India. According to SEBI guidelines, IDRs are issued to Indian residents in the same way as domestic shares are issued. The issuer company makes a public offer in India and residents can bid in exactly in the same format and method as the bid for Indian shares. 4. Foreign currency convertible bonds FCCBs. Foreign currency convertible bonds are equity linked debt securities that are to be converted into equity or depository receipts after a specific period. Thus, a holder of FCCB has the option of either converting them into equity shares at a predetermined price or exchange rate or retaining the bonds. The FCCBs are issued in a foreign currency and carry a fixed interest rate which is lower than the rate of any other similar non-convertible debt instrument. FCCBs are listed and traded in foreign stock exchanges. FCCBs are very similar to the convertible debentures issued in India. 5. External commercial borrowings ECBs. ECB is the borrowing by corporate and financial institutions from international markets over 180 days. ECBs include commercial bank loans, buyer's credit, supplier's credit, security instruments such as floating rate notes and fixed rate bonds, credit from export credit agencies, borrowings from international financial institutions such as IFC. The incentive available for such loans is the relative lower financial cost. ECBs can be taken in any major currency and for various maturities. ECBs are being permitted by the government for providing an additional source of funds to Indian corporate and PSUs for financing expansion of existing capacity as well as for fresh investment to augment the resources available domestically. Dear students, in this video, I had dealt with international capital market instruments including GDRs, ADRs, IDRs, FCCBs and ECBs. Thank you.